Hey, it's Mac with PriceActionTradingSystem.com, and it is, I believe it's Tuesday. Yep, Tuesday, December 12th. This will be our chart lesson for the day. And another range day, pretty much very similar to yesterday. We started out in this tight range, and then we tested this bottom a couple of times and traded up. And of course, I mean, if you look, this would have been the far right hand. You can clearly see the lows and the highs. This was a real easy one and to see. And once you know your height there, you just measure it up, and that would be your target. You can see we made that. We actually went a little bit higher, but I would also measure the leg up that we made that goes from here to this high, and that would drag this over and look for, in case we went higher, that would be my next target. But those are basically within a tick or two of the same place. So it would have been my target right along here, and you can see we actually pushed a little higher a couple of times before trading back down again. And notice the brown lines over here. We just kind of went into another range over here the last few hours of the day before we got into the 2 o'clock hour. We pushed below that now. Uh, but we had a lot of support right across here, a lot of resistance right across here, and we also had some support right across here. So once we went higher, that's how I would have found my target, and that would have been what I would have been shooting for a target. But let's talk about the trades. I'm trying to do these a little bit earlier this week. Uh, Going into the holidays, it's kind of quiet around here, so um, I'm trying to do this a little bit earlier and get out of here a little bit earlier before I take the last couple of weeks of the year off. So I think we talked about it yesterday in one of the videos, but I will probably um, maybe work Monday or Tuesday of next week, and then I'm taking the rest of the year off. So just be kind of make notes of that, so when you don't see any chart lessons or mid-morning charts on the website for this last couple of weeks, you'll know why. I'll be back in the office January 1st, but I'll probably trade Monday or Tuesday. Haven't made up my mind yet. We'll come in and see what the price action looks like. Um, but I may go ahead and just take those whole last couple of days off there. So we'll just have to see them. I know I'll take, again, I know I'll take off from the 20th on, but I may take off Monday and Tuesday as well. It just depends on what the market's like and what's going on around my house. So, but let's talk about the trades and wrap up today. As I said, when we came in, we were clearly going sideways. This was a no-brainer. Uh, Notice how many times we tested that big bearish bar. I like going short right there. This is not a trend line. This is the measured move, so don't get confused there. Um, but as many times as we've come off back and forth, actually at that point the lows were a little bit higher, but we moved on down, so I moved it down once we got a couple more closes right across there. But we tested that. We made this high. We tested one, two. This was the third time. Nice bearish bar. Generally, you want to wait on a lower high there. But I think you had enough test here, and plus it's a second entry. Notice that low, first entry, second entry, and you had enough test there. You're a little bit away from the EMA. I think you want to risk that one. It's obvious there's strong resistance here, and so you're getting in really close on a second entry there. It would have been nice if this lower high would have set up, but it's just not really a setup there to catch that one. So if you didn't catch this one, you don't get this ride down. And then here, we only really had, we actually made a lower low. So, and you didn't really have a lot of evidence that this was holding yet. So this one's a little bit risky. Again, it's a second entry, and you really could treat this one like a failed break lower. You got a fairly bullish bar, and then you get an even better one. So you might have taken that one. But generally, like I said, just as up here, you're better off to wait on the a higher low or double bottom or whatever. And you get that right here with another nice bullish bar. And so, and now you got a double test, so you got a little bit more evidence that this is holding. Here, it's a little riskier. But there was that one tick lower, so you could treat that like a failed break lower. And You know, a lot of times that catches low. So if you caught either one of these, actually, if you caught this one, you would have got stopped out. Here, you could have had a runner, and it would have been a major low, and you could have ridden that all the way up. And I probably would exit here, but if it pushed on through and you were still in it, that would be my next target right there. I would exit right in front of that. And you can see that would have been a nice target area. You'd had still had a little room left over. Um, and then, of course, if you draw your line off those first couple of swings there off the top using the closes and you drag it down, that was a perfect bounce. But notice what happens here. There's a little bit of resistance right across here. We pushed through and we made a low there, and then we came back once, twice, and we tested. We basically make a double bottom and bounce right off the EMA, right off that support resistance line, right off a possible trend line. Very bullish bar. The only thing that I don't like about that entry is it's right into that resistance. You just don't have much room, and you probably would have had a hard time catching it because notice it gaps over right there. And I don't know if it would have come back, and I doubt if you dropped a limit order, it would have come back and filled you here. But watching it break a tick higher there and then come back, and I probably, it's just not a great place to enter. There's some reasons to consider that one, but it's a very bullish bar, but it still could push right here and turn back down. So you're better off to wait. And guess what happens? Notice that this swing is lower than that one. It's also a double bottom, so it's like a new swing. And then you get a first entry short, a second entry short. So you got a failed second entry right there. It bounces right off the previous resistance, holding as support twice. You get a double test of that. A nice bearish bar. I like going long right there. And your target again is up here. And you probably would have had to use a limit order and hope it came back and filled you. I don't know if it would have here. I know it would have come back and filled you here. Either way with the limit order, so you would have got in that one. And then it pushes up, and guess what? It pushes a little higher, and you get an overshoot too. It's not by much. It's not enough to really say for sure, hey, we got an overshoot, but you got to be careful. But I just wouldn't want to enter anymore right into that measured move, even though you do get a little bit higher on this other one. It's only a couple of ticks, maybe a point at the most. So that's just risky going long right there. But it was really tempting to enter there. I wanted to, but knowing what normally happens into that resistance, the rules will tell you it's probably not a great trade. So I'm not even going to mark it, even though it would have worked. And that's what will happen. You'll say, I'm not taking that. The rules say don't take it. And then you won't take it, and it'll jump straight up. And then it'll come back over here, like right here, and you'll say, well, I'm taking it this time. And guess what? It doesn't get your 4 ticks. It fails, and it stops you out. And that's why you don't take it, because most of the time that's going to fail. Even though here it might have had enough room to work, most of the time it won't. So, but anyway, it breaks higher. And you know, look at all that resistance across there. Actually, at that point, I had this right here, and it probably fits better there anyway, so you could move it up, even though it's a tick higher than what our target was. It still fits there. Notice how you get most of your touches and closes there, and so that's really where it needs to be. And that's fell break higher, and look at that big bearish bar. Even that one's fairly bearish, so you might have considered there. But I like this one because it closes all the way on its low. You're still a little way from the EMA, still a little bit from this low, which is probably going to come back and test that. But the other thing, you did get a little overshoot here that's maybe iffy. But the other thing is you do have a channel working up here, and there's no real solid close outside of it yet. So this is risky. So until I saw this huge bearish bar, and even then it's still aggressive, because it could tick one tick lower and turn right up and go a tick or two higher and then come back down. The only thing you had going for you were these measured moves, and sometimes, you know, it goes higher enough to maybe you would have got stopped out there. So that's risky, but there's some reasons to still like it. It comes back down, shoots right through the EMA. I really thought we were probably going to get a reversal pattern here. but it never really sets up and we just start going sideways. So you just kind of got to sit there. It does make a lower high right here after two legs up. There's a leg up, then a little correction, and there's another leg up with two legs in it. And if you can't see that, study that till that makes sense. Again, you got a leg up, a little correction that's got two legs, and then another two legs up for a measured move, basically. So it's two legs up there. So that's a second entry, but it's not a very good setup. You do get a lower high here, but look, it's right back into that resistance. You can't go short into that. Even though it worked, you can't go short into that. And instead you really get a failed break lower and a double bottom, and look at that big bearish bar. That's a little large bar. So you may let it break higher and drop a limit order right at the high or back a little bit, just to try to get a little bit better entry than putting it one stop above. You may or may not get filled, and of course it goes right back up and tests the top again. And now you get a bearish bar with a double test and a lower double top than the original highs. So I like entering there. You get, and this is why we go for 4 ticks, because it gets just enough to get you out, and then it bounces again. If this hadn't been after 2 o'clock, I'd have said, hey, enter again right here if you've got enough room to get out. Now that it's bouncing there again, and you could still be riding that one if you'd have taken it. So, but yeah, it got a little dicey up here in the afternoon. And really, when you get in these ranges, the only thing you can really do is sell the highs and buy the lows. And even then, you need to be choosy about it. It needs to fit the rules. You need to have good signal bars and so forth, or else you're taking a risk. You may get stopped out. I mean, you could have entered any of these up here and you'd have been fine, and any of these down here. Except, well, I take that back. If you'd entered right here, you might have got burned. So, but you would have at least had a trend line to help you out here. You can see that trend line working down through there. Looks like we're trying to get a close outside of it now. And that actually fits pretty well down through there on both sides. So that would have kept you out, hopefully, from entering right there. But really, even here, you do have 2 legs down, so that would have been pretty iffy. But that's why I don't know what it is about the afternoons. You will see more of those kind of issues in the afternoon than you do in the mornings. But yeah, there were a few trades, and again, all the good trades were off the lows, and all the are off the high. There weren't very many really there weren't very many today. Period. There were more than what we might usually get for this tight of a range day, because really most of the time we were within 2663.50 and 2667. So that's about 4 points. And then you just had another 4-point range, but really most of the day you were within that. I mean, look, 90% of your price action here, we did swing outside of it on about another 4-point, but most of the price actions within a point and a half right there. And you better just stay out of that. It's just not worth risking it. So, but anyway, that's what we had today. And as we get further in the holidays, it's probably going to get a lot more of this, and that's why I'll probably take the last 2 weeks off. That's why I do take the last 2. Well, that and just for the holiday, and to be with my family and so forth during the Christmas holiday here in the U.S. So, but yeah, a lot of times there just won't be much happening during that time. If you want to sim trade just to get experience, I mean, you can sim trade anytime the market's moving. You can sim trade, and you probably should if you have time, because it gives you a chance to see everything you might see in the market. And that's what's so hard. That's why it takes so much screen time and experience, because you might see it do this for a week, for several weeks or several months. Then all of a sudden it starts trending, and you get used to this, and you start trying to trade this, and it starts trending. And every time you buy a low, it just goes lower. Every time you buy a high, it just goes higher, or sell a high, it just goes higher. And you just keep getting, and then you'll get used to trading it, just buying with the trend, and it'll work every time. And then all of a sudden it'll change, and it'll be a range again, and you get burned every time. So as you start to see this over and over, it's like anything that you do repetitively, the more you see it and the more you start to when you watch it, the more you start to learn it. And so get as much screen time as you can. And the key is to do it on the simulator. Don't try to do it live with your real money. I hadn't said this in a while, but if you're just going to be a donator, don't be a donator. Save your trading capital to use once you've got the experience. So get on the simulator. It doesn't cost you anything. You may have to open an account to keep the same one going, or you may have to just keep opening one using different emails or whatever you got to do. But, if you need to, open an account with $500 so you can get the data and you can get, you don't have to worry about whether you got enough, whether you got to keep signing up or whatever. Just make sure you got a sim account that you can trade every day that uses live data. And I mean, it's just like trading the real market, other than it's not real money. So the key to, though, is don't fool yourself. Don't sit there and take chances and double down and move your stop and, things that you would do with real money, because you won't be able to do that if unless you got a humongous unlimited account. You'll just be giving your money away and fooling yourself on the sim, and you won't really be prepared when the real trading comes. So you got to trade properly, but once you can double, say, start you a $5,000, $10,000 sim account, and once you can double that trading properly, then maybe you're ready to jump in there and trade some singles or something and get your feet wet with real trading. But that's going to take a while, I promise you. If you don't if you trade properly and you don't do crazy things, it'll take you a while to double a sim account for even $5,000 probably. I mean, I know people that can't, they'll empty a 5,000 sim account. They can't even do it on sim, and then they'll jump in there and wonder why they can't do it live. Well, if you can't do it on the simulator, trust me, you will not do it. You'll just be a donator if you go to live money. And you don't want to be a donator. Your trading capital is precious, and so you want to protect and save that trading capital for when you really are ready to trade. And I see it over and over. People come in here, they start, and in a month they think they're ready, and they say, and they'll go and they'll blow an account, and they'll say, well, I thought I was ready, but now I know what I did wrong, and they'll do it for another month, and they'll think they're ready again. When you're really ready, you'll know it. Even though I know I've seen this enough and I've been down that road and done it myself, you'll think you're ready multiple times before you're really ready, because you're eager to go make money. And that's kind of a barometer. Let me say this and then I'll wrap it up. But that is kind of a barometer of whether you're really not ready. If it's still exciting trading and you're still excited about wanting to get started, and when you have wins, you're on a high. When you lose, you're on a low. You're not ready. That's the real true gauge, because once you're really ready, this kind of gets boring. It becomes a job. You've seen it enough and you've done it enough that you know what you're doing, and it gets kind of repetitive and it gets boring to some degree. That's when you know you're really getting there. But if you're still taking trades, and every time you have a winner, you're on cloud nine, and every time you have a loser, you're down and out, especially if you still have that occasional really bad day that just really wipes out a large portion of your account, or a third or something, or a half or more, depending on how big your account is, then you're not ready. Trust me on that one. So use that kind of as a barometer. Hopefully that makes sense to you. If it doesn't now, one day it will, because sometimes you have to get there before things make sense. And I say that all the time. You won't get it right now, but one day you'll look back and you say, nah, I know exactly what old Mac was talking about when he said that now. It makes complete sense. But so when you get there, it'll make sense. In the meantime, it may not make sense. So, and I don't know how to describe it any differently than what I just did, because it's just a learning phase that we almost all have to go through. I went through it myself. I had those days. I'd go 2 or 3 weeks and not have a losing trade, and then I'd think I was smarter than everybody else, and I was smarter than the market because I was having success, and I'd give it a little more room when I wasn't quite right. And you know the story from there. When you give it a little more room, you just give them more money. When you're wrong and it doesn't do what you thought it was going to do, get out, even because it's much easier to take a 8-tick stop and take a loser than to take an 8-point stop and take a whole week's worth of trades and throw them out the window and give them right back. So that's a very important lesson. That was all of us will have some mental issue that we struggle with. Mine was moving stops and giving it more room. It took me a long, long time to get over that. I mean, literally, I might go a month and not have a losing trade because I would monkey with my trades and give it a little more here and a little more there, and I thought I was smarter than the market. And then occasionally, then one day I move it and give it a little more room, and I'm wrong. I said, well, another point's not going to hurt, and I give it another point. Next thing you know, I've given back a whole month's worth of trades on one loss. And you're talking about depressing. And so don't get caught in that trap, because that was my mental monkey, so to speak, that was always on my back. And yours may be something different. Yours may be that you can't even get a winning trade, or it may be that it may not be moving stops, but it's putting your stop in the wrong place or tightening your stop too much. We've got this down to a science. If you just follow the rules, it works. I get emails about that all the time. I got one today, I think, or yesterday, matter of fact. Somebody says, hey, when I follow the rules, my account grows. And when I stop following the rules, suddenly I'm wondering why I've lost money. And he says, it's just simple. Just follow the rules. But it's amazing how hard that is to do. And that's part of the battle, is to learn to be very disciplined and follow the rules. So I've been down that road. So I sympathize with you if you're on that path right now of trying to follow the rules and finding out how tough it is. It's really simple once you know how to do it, but getting there, I don't know why it's so hard. It's like I always tell people, it's similar to smoking. I've never been a smoker, so I don't understand that one, but I've talked to people and it's very difficult for them. Or, one is I'm kind of a health nut, so I've tried to gain weight and lose weight and so forth, and bulk up and lose weight. And so I know how hard it is to lose weight, especially as I've gotten older. And so I liken it to trying to lose. To me, it's kind of like losing weight. You just have to, your mind has to be stronger than your body. When you get hungry and you say, I want that, that ice cream or that snack, I can't have it. I need to go eat something healthy, or eat a salad or eat fruit. But your stomach's telling me I want that big steak or that nice hamburger or whatever. And you just have to have the discipline to say, nope. I'm not going to eat that. I'm going to eat whatever, even though it's going to be boring and no fun. That's what I'm eating because I want to lose that weight. Well, it's the same thing with making money and trading. You got to say, I want to take that trade, or I want to move my stop, but I know that's against the rules, so I'm not doing it. And you just have to be strong enough not to do it. So anyway, I've been on here 22 minutes today, but I hadn't had a talk like that in a while, so I thought maybe it was time to do it. We probably got some new people that hadn't heard those talks. So, yeah, every now and then I like to get on my soapbox and talk about stuff like that, and hadn't done it in a while. So, anyway, I'm going to wrap it up. This is getting too long. We'll be back again to do it tomorrow, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.